Hello everyone. Hello everyone. A very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be considering a pattern named as inverse rectangle pattern. This is a technical analysis tool which we can utilize to determine the support and resistance zones and how we can trade using these price levels to look for the breakout. In the prior session on the rectangle pattern, I had explained to you the possibilities of using the support and resistance zone in this rectangular formation. Now we invert it and see how we can also use the similar formation, almost the same identical formation, to consider the breakouts from those levels. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA.
Can older guys date younger women? So many guys think they know the right.
It's taking some time. Let's wait a few seconds. All right, we got it. This is the AUD USD chart drawn in the candle period of 1 hour. Let me change it to Euro USD. It appears to be a problem of the internet connectivity. All right, we are seeing that the price levels are now live, so we should be able to change. Subscribed. This is AUD JPY. Let me go to Euro, the most commonly traded currency instrument, Euro and USD. Okay, here we got it. And in today's session, we are seeing finally a breakout of sort from these levels for Euro USD after hovering close to the 1.09 level above and below for most part of European trading hours. Finally, we have here a significant up move in the North American session, and it is likely to take the euro towards this prior swing high. Now we will see how we can utilize this kind of dynamic scenarios to profitably trade, and for that we are going to use this inverse rectangle pattern. We can simply do a quick search. If you type in inverse, you will see all the patterns in which inverse is involved in its name. So inverse head and shoulders, which we had considered in the prior session. Today it's the turn of the inverse rectangle pattern. Now, as I have added it on the chart, we will have to see in this data when it had formed recently on the chart. This is a rare formation. It is not going to take shape too frequently. So I think we will have to go back in time and see the instances where it might have taken shape on the chart on the hourly time frame, or else we will even need to utilize different time frames to look for this formation, and then I will be able to easily explain to you its concept, its utility, and the ways we can customize it. So this is one such instance of this inverse rectangle formation. For a rectangle formation, we mostly use the horizontal lines, the levels defined by the support and resistance zone. But to invert it simply means to invert the concept on its head And instead of trying to trade within the rectangle pattern, we go for the opportunities where we see that now there is a substantial breakout, a sustained breakout from these priorly defined levels of support and resistance, and we can expect these formation to give us a clear cut breakout, and using that breakout we can bet for a large move in the direction of the breakout and try to capture those moments, and of course the profit generated therein. So now if we look at these two instances here, for the inverse rectangle formation you would have needed this combination, the rectangle formation, to take shape, and after you saw that the breakout happened below this lower horizontal line, and for next couple of candle periods the price moves were sustained below that level, you would have been in a position to short sell it, and subsequently there was this decline observed with the stop loss coming in closer to the high of this rectangular formation. If you wanted a wider stop loss, and stopping out only if there is a total reversal, but I think even a stop loss just somewhere in the middle of this rectangular formation would have sufficed. So then we got this price move again. The price moves didn't really go substantially in a unidirectional manner, but rather it started to consolidate after this initial move lower, and subsequently again we saw this fresh rectangle formation. Afterwards, we saw that in this case, after due consolidation, the price again dipped and sustained below this lower horizontal line. And if you were to initiate a short sale trade with the stop loss coming in somewhere closer to this immediate swing high, you would have been able to make a decent amount of profit with a risk reward ratio also quite favorably poised. So that is the way you can trade a inverse rectangle pattern. Let us look for some more examples so that we can gain further clarity. And for that, let us try to reduce the candle period to 15 minutes. So we will get more formations to deal with. So here we got these two cases. Now in this scenario, we saw that this breakout happened on the lower side, then the price move was sustained, and if you were then to short it, you would have been made a significant amount of profit with quite less stop loss. But not so much here. This short duration inverse rectangle formation would not have given you a profitable trade, and in this case the stop loss would have been fairly sharp, as this happened during the night hours during the low volatility time. So here there was not much of a movement on either side, so the stop loss would have been short, and unfortunately in this case the stop loss would have been hit. But that also reminds us that not all the times we are going to make money using these formations, and we will have to always keep in mind that not all the trading opportunities generated by this formation, or for that matter any other formation as well, are going to end up in profit. Some of the trades are going to end up in loss. So in those kind of scenarios, the trade optimization technique is the only thing which we can rely on, and hope to profit from these kind of market scenarios. Here there were two formations of this inverse rectangle. In first case, the price didn't really dip much even below this horizontal line drawn within this larger rectangle formation, and the price again reversed and it would have gone on to hit in the loss. But subsequently, when there was sharp move lower and the price sustained on the lower side, if you had gone on to initiate a short sale trade, then in the second instance you would have been able to make a good amount of profit, as there was this price move of almost 60 pips lower. So in these both the scenarios we saw that loss as well as profit can come your way. And when you see that the loss is likely to occur, we can deal it with trade optimization techniques. We have to try to minimize the losses. For that, your defined level of stop loss should not be too wider. I think here in this scenario, if you had gone in for a stop loss of around 20 to 20 pips or even less than that, because there was not much of a move on the lower side below these horizontal support. So in this case, the stop loss it was going to be much sharper. And after this substantial move lower, if you were to initiate the trade somewhere here, then in this case the stop loss would have been of 30 pips around. But in this case, the continuation momentum was quite strong and you would have been able to make quite a good deal amount of money, as the target price would have been more than 50 pips, so giving you a risk reward ratio of even better than 1 is to 1. So not much, like not great risk reward ratio like 1 is to 2 or 1 is to 3, but still a favorable outcome indeed. So that's the way, some of the ways you can utilize these inverse rectangle formation. And we saw these two instances in the Euro USD. Let us see if we can figure out more opportunities in equity indices. In equity indices, there is not much showing up on the chart. So I think with this example, we will stop for the day. Tomorrow we will deal with a new formation, different charting formation, and see the opportunities generated therein. Thank you all for joining in. Have a profitable day ahead. Goodbye.